Hello folks, my name is Eric Wilkinson with ProTrader Strategies, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. And I'm going to do the same thing in these daily market commentaries, but I'm also going to talk about my option strategies that I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. For you folks out there, what we've done is streamline that process in order to find the optimal option strategy for any given assumption. We aren't just picking option strategies out of the hat here at ProTrader Strategies where you got a bullish assumption so you go out and buy a call. No, that's not what we do. We look at what's going on in and around this underlying, determine what is the best option strategy for you, and we really build a nice process for you guys in our daily market or in our webinars, I should say, where I really drill down on each option component, when, where, and why we would implement that around any given assumption. So please check those out. I really just don't have enough time to do it in these daily market commentaries. All right, so let's get on with the economic data. It is an FOMC day where we are going to get the statement from Powell later on, and then what people are probably more concerned about is listening to that statement and how it has differed from previous statements. That's the big thing that's going to be going on. A lot of markers going through this statement and figuring out how that is a little bit different. Now, we've got a lot of things going on right now. We've got the stimulus checks going out to about 85% of the U.S. population. This time, the dependents are getting a bigger check as well, so that is going to really influence the overall markets. Now, a lot of people are really worried about inflation because with this extra cash in people's pockets, that is going to drive spending, and that spending has a tendency, or should at least have a tendency, to make prices increase. All right. Let's get on with the economic data across the pond. Not really a whole lot to see there, but here in the United States, we've got all kinds of stuff going on. We got the crude oil inventories coming in at 2.4 million barrels, expected to be a build of 2.8 million barrels. So finally starting to see more of a pullback in some of these inventory levels where we've been seeing crude oil really build and the distillates really start having drawdowns there. Well, kind of a flip here where we're seeing it come in line, maybe slightly lower than expected, but we did see some builds over on gasoline and distillates, the refining product from that crude oil process. It wasn't a major build, so not really anything to speak of, mostly about 500,000 barrels of each, so that's not a major build. And then, like I said, we've got the press conference later on today, Fed fund rate decision. It's going to be left unchanged, but it's really going to be their forward guidance that people look for here. All right, so a lot of markets struggling today. We can see crude oil after settling down below the 65.43 area that we have lined up with our Fibonacci. This is lined up with right before the pandemic high. We're back below that, and now today below the 9-day simple moving average. So are we going to continue to see lower higher highs, I should say, and higher lows, while a breakdown below 62, 63 area could start signaling a break in that pattern, and that we are going to start seeing a little bit of a correction here in crude oil, which is obviously what I've said time and time again, like to see. Stimulus checks going out could drive demand for gasoline as well, as people decide, hey, it's spring break, we got our stimulus check, let's go somewhere, and that would then cause people to start spending, right? That drives prices higher. All right, bonds off by almost a point today ahead of that FOMC meeting. I don't think that they're going to signal rates increasing anytime soon, so we could start seeing a bottoming here in the bonds. We got Bitcoin off by about $500 today. Looks like that's actually starting to top out there, and look for a correction in Bitcoin. I have no position there and probably am not going to add anything. Gold futures off by about $3, but for most part, that is unchanged. And we can see here with the VIX, we got a bit of a bid here back above 20. We were out of that 20s and back into the teens. We've been saying for quite a while now that 20s are the new teens. Well, is this volatility going to finally start ebbing out of this market? We're going to have to keep our eyes on that because, those super high prices in the options could be a thing of the past there. Now, Dow Jones really looking toppy, even though we got that high, all-time high overnight, yesterday, we are starting to make this look like a bit of a topping pattern. You know, I talked about it not being a very good pattern unless we finish below Monday's wick. Well, today we are starting to see a little bit more bearishness seep into the market as the day goes by. It's really going to be a wait and see what the Fed has to say. But, you know, again, still consistent with that below Monday's wick is going to start signal more bearishness in the markets. Now, we got NASDAQ confirming a bit of a top here. We talked about its chart pattern, settled below this 50-day simple moving average on, Tuesday, and today getting a bit of a confirmation. So back down into this trend area that we talked about, the trend channels from 2017, 2018. And with the E-mini S&Ps, yes, they did make an all-time high yesterday as well, but today making that confirmation to the top. A sloppy topping pattern, though, to say the least. And finally starting to break that pattern of really having continuous points of control moving higher here throughout this week. Today, breaking that pattern to the downside. Probably more profit taking, again, ahead of this FOMC meeting. It's one of the most watched, probably, FOMC meetings that we're going to have coming through this year, as a matter of fact. And then let's talk about a couple of trades that I've done. Really, all I'm trying to do is manage some of these things and take off the covered call strategy of these underlyings that I have. And with IBM, my options expire tomorrow. So I am very close because I am short the 130 calls in there that are originally collected 54 cents. I'm trying to get out of these IBM trades for about 9 cents. I've got a working order in there. It hasn't ever really even gotten close because I am so close to that 130 handle. So it is going to be a nail biter going into Friday, whether or not that I get called away or I get to keep that collection on those short calls to lower my overall cost basis. So one of those two things is going to happen, and I'm going to have to probably write it out until Friday unless there's more of a correction here in IBM today, tomorrow, or Friday. I don't really think that's going to happen. I think we're going to kind of calm down here. Yes, we are near that value area high. One would expect a little bit more of a correction back here. But at this point, I think that I'm going to hold on to these. I'm definitely going to hold on to these. If it gets called away, I'm fine with that. If I get to keep the collection of credit, I'm good with that as well. So staying with that trade here. If it gets called away from me, I'm just going to start going in and selling cash secured puts, folks. Try and get this back. Probably sell those around 115 level, all right? So IBM trying to get out of those calls. Just got a working order in case anything crazy happens there. And with Home Depot, you guys remember I've been working on this trade for what seems like forever, and I have lowered the overall cost basis on this as well, but we set this up as a poor man's covered call here back in basically December, where I did the March Jan, and I did the March 210 calls where I got long those, sold the January 285 calls to do that poor man's covered call, and I did that for a total collection or a debit of $54.41. Originally rolled those Jan short calls out to the February, then to the March, then to the April, then to a further out March that we have there, and or actually just to the March, on the April, the March to the April was the leap where I was actually short longer calls than my poor man's covered call strategy. So I did that and ended up making a little bit of a profit on those there. But at the end of the day on those 285 calls, made about 80 cents or something like that. But I've overall lowered my overall cost basis on this trade quite dramatically. We're talking almost $6 at least on this, just ballparking that in my head. So with Home Depot, I've done the covered call strategy to the upside. Now I'm trying to get out of these at 285. That was my original short call area in the January because we were seeing this topping, and it lines up with a lot of the areas where we found some resistance is right there at around 285, that line in the sand. I don't know if we're going to get there, especially with this bit of a candle here. I do have a working order to get out of these at 75. and that would be equivalent to that, if you think about it, 210 long calls plus that 75 is 285. That puts my spot where I would be exiting this trade at around 285. Now, obviously, we've started to lose this momentum and it's starting to look a little bit toppy. So I'm going to make a decision on this. I'm not going to hold my feet to the fire to get out at 285. I'm going to look to get out of this trade today, depending on how the overall markets start reacting to this. So definitely looking to get out of my Home Depot trade. And then finally, we have PENN, which is, I don't know why I forgot to do PENN, but Walmart. These are the ones where I had some long calls in Walmart. I'm long the 150 calls and the 155 calls. Both of those are likely going to expire worthless. I cannot see any way that this market is going to rally 20% in the next couple of days. So it is going to probably expire worthless on those long calls in Walmart, just not working out. And then finally, since I mentioned it, let's talk about PENN again, because it has had a couple of days of sell-offs here, and I'm looking to get out of my covered call strategy. As a matter of fact, I thought I'd probably get out of this by the end of this video, but it's not quite happening here. And if you guys remember, I'm long PENN from back here on the day that it made the low, bought it at 449, have been selling covered calls, which I'm going to be doing a guest spot with Options Brew 2 TV, and we're going to be talking about this covered call strategy in PENN specifically. I'm also going to throw in there a little bit about my IBM, but this one is a perfect example. Most people think that covered call strategies, you need a sideways trending market in order to lower that overall cost basis. Well, I'm going to give you an example of where people would normally not be thinking a covered call strategy would work, and show you how we have knocked that one out of the park. So we'll talk about that today. And again, I'm trying to get out of my April 190 calls for 36 cents. I originally sold those for $1.36, so being a little cheeky, just trying to get that full dollar out of there. Last I checked, it was trading around 43-ish. So very close to getting that, just a couple of down ticks, and I might be able to exit these and then start looking on a rally to start selling some more covered calls. So that's all I've got working right now, is a few working orders that have not gotten clipped yet, but I wanted to make sure you guys were clear of what was happening today ahead of this meeting, because it could get a little bit jukey later on today with that statement. So make sure you guys are paying attention to that. Last thing we've got to do is go over our disclaimer, as we're an educational company. I'm not trying to get you guys to do the trades that I'm doing. What I'm trying to use is these as real life examples for you guys to follow along and implement into a portfolio your own based on your assumptions. All right, so that's all we got. Check out that video today. It is at optionsbrewtv.com. I'm going to be talking at around 5 o'clock Central, 6 o'clock Eastern, so make sure you guys are signed up for that. And then tomorrow we're going to also be doing our regular course for pro trader strategies. That's all I got, other than if you can't take that, take it easy.